Alright, so this is 3-2 work together. We just had the notes. We click on the work together and we have our transactions. Again, you hit the pen guy, move them around, zoom in a little bit so you can see a little better. We have the work together from previous section 1 when we had Norma Dirks invested cash and then we bought supplies with cash. Oops. So here's our transactions for this one. Again, the chart of accounts is there if you need it. We have 3 transactions that we learned in this section. Bought supplies on account from Supply Mart is the first one they want us to list. So step 1 is the date, 5, and we bought supplies on account. The memorandum is the source document, and what we're doing with this is we're not using anything in the special amount column, sales, debit, or credit to cash. So when we don't use the special amount columns, we need to have a debit and credit in the general account. And what was our rule in there, saying whatever's in the general debit or credit must have an account title. So what's the first thing we do when we bought supplies? We increase supplies, the asset. So we will debit supplies for $600 and we will credit accounts payable. I'm going to put a dash, Supply Mart. I put that dash there. And we will credit the accounts payable because we're increasing the liability. Anything that's in the general columns, debit and credit, we will then put an account title for each. When we do the second transaction, paid cash for insurance, we have the 7th as the date. Paid cash for insurance means we know we're going to be using cash credit to lower the asset cash, and we are going to be doing insurance. What we call paying insurance is called prepaid insurance. We're increasing the asset insurance for $500, and we're writing a check for that, which is the source document C2. We wrote a check earlier for supplies, now we're writing a check for insurance. Debit in the general is the account title, credit cash. The last transaction is the 9th, pay cash on account to Supply Mart. Well, we know we increased the liability Supply Mart on the 5th for $600. So now we have to lower our liability to them, which is good. We don't want to have a bill, so we have to debit Supply Mart. We increase it when we bought supplies on account, and now when we pay cash on account, we are lowering our bill. Whenever we pay cash, we will lower the asset. So $300 credit to cash, $300 debit to account payable Supply Mart lowers both cash and our liability. You have the source document C3 to indicate we wrote a check there. Hope that makes